Now you got these fuckers trying to pass a 44% capital gains tax on top of the 60% death tax that they have. Okay, so do you know what that means? That means that you work your whole life and along the way you pay 40% income plus another 20 or 30 to the state, right? When you add it all up. Then if you build something, which is hard to do because of how much they fucking take from you on that side of it, if you happen to build something, then when you sell it, you got to pay them 44%. Okay? Then when you die, you got to give them 60% if you don't have a will set up or a trust set up.
Of whatever's left.
Yeah, people don't understand this, bro. That makes the government your fucking partner in life, no matter what you do. No matter what you do.
That's crazy.
Yeah, people don't understand taxes, bro. That's why they don't teach it to you in school.
And get better odds just getting in a fucking divorce.
Bro, listen, dude. 98% of people do not understand taxes. They don't understand it.
They don't get it, yeah.
If they understood it, bro, they'd realize, holy shit, dude, I'm getting fucked.
Okay, guys, that clip is from Andy Frisella in his podcast, Real AF. Andy is right about a lot of things. He's especially right about taxes. The government takes anywhere from 30 to 50% of our income throughout our lives, and most people don't even know it. It is our responsibility to learn about taxes, and especially if you're in the real estate industry, it is part of your job to understand real estate taxes. So you need to listen up to today's episode because we are going to learn how to use real estate to offset our tax burden. Welcome to the Mastering Real Estate podcast. This podcast is for real estate investors and professionals looking to take their real estate game to the next level. Each week, I review the industry's leading real estate books and break down the main lessons that you can apply to your life and business. Then, every other week, I review my own personal lessons learned from flipping over 100 houses and being a full-time real estate investor since 2018. Stay tuned each week so that we can all become masters of real estate together. Welcome back to the Mastering Real Estate podcast. This is episode 21, and today we are reviewing Amanda Hahn and Matthew McFarland's book on advanced tax strategies for the savvy real estate investor. Back in episode 17, we reviewed their first book, Tax Strategies for the Savvy Real Estate Investor, and it was a solid book about tax basics that all real estate professionals and really all people need to know. However, reading it motivated me to want to learn more about some of the more advanced tax strategies available. So I knew that I had to read their second book. And honestly, I like this book even more than the first book. I know that reading and learning about taxes is probably no one's favorite thing, but it is part of our job as real estate professionals to know this stuff. And most of us are leaving so much money on the table because we just don't know about the tax strategies available to us. So, love or hate taxes, you need to listen up to this episode in order to step up your real estate game. I'm your host, Maura McGraw. I've been a full-time real estate investor since 2018. I've managed over 100 flips, founded and grew a real estate investment firm, and I live and work in the real estate industry every day. If you're new here, we have 2 show formats on this podcast. And if you're not new here, first, thank you for listening, and you know the drill. Every other week, I review a real estate book and break down the main lessons you need to know to up your game in the real estate industry. Then, in between the book episodes, I share my own hard-won lessons learned from my own experiences in the real estate trenches. Hopefully, these episodes will spare you from some of the pain I've endured as I cut my teeth in real estate. Regardless of the show format, the point of the show is to help elevate all of us as real estate professionals by learning as much as possible from each other. This podcast is made possible by Doratus Properties, or my real job. DeRatis is a real estate investment firm in Alabama, and if you are a real estate professional located in or around the Birmingham, Mobile, or Baldwin County areas, we would love to connect and work with you. Despite the crazy interest rates, we are always looking for properties to buy, and we always want to expand our network of business partners. So you can send me an email at maura@DeRatisProperties.com or fill out any of the forms on our website so that we can connect. Right now, we are actively looking for more properties to flip and add to our rental portfolios. Keep us in mind. Okay, back to the show. This week, we're reviewing Amanda Hahn and Matthew McFarland's second book, Advanced Tax Strategies for the Savvy Real Estate Investor. You may have heard in episode 17, we reviewed their first book, Tax Strategies for the Savvy Real Estate Investor, which was a solid book that covered all your tax basics. This book, however, is very cool because it gets into the more advanced but really cool ways to significantly reduce your tax burden. I'm not a numbers person per se, and even I found it very interesting. However, even if you don't find this kind of stuff interesting, if you are in real estate, it is literally part of your job to know about real estate taxes. Taxes are a huge part of real estate investing. So if you're clueless, you're just neglecting part of your profession, which is not cool. Okay, I'm off my soapbox. Before we jump into the meat of the book, let's learn a little bit about the authors and husband and wife dream team, Amanda Hahn and Matthew McFarland. Amanda Hahn is a CPA and seasoned real estate investor. She earned her accounting degree from the University of Las Vegas and boasts over 2 decades of tax planning experience. As the co-founder of Keystone CPA, she specializes in crafting tax-saving strategies for real estate investors across the nation. Amanda's expertise has earned her recognition in publications like Money Magazine and CNBC, and her best-selling book, Tax Strategies for the Savvy Real Estate Investor, has sold over 50,000 copies. When not revolutionizing wealth-building techniques, Amanda enjoys painting, beach biking, and exploring hidden culinary delights. She currently resides in Fullerton, California. Matthew McFarland, her husband, is a CPA with over 20 years of experience. He specializes in tax strategies for real estate investors, and he holds degrees from UCLA and USC, and is the co-author of their book. Beyond his professional expertise, Matthew founded the Animals for Armed Forces Foundation and is an avid baseball enthusiast. He resides in California with his wife as well. Here is a summary of the book. This book provides comprehensive guidance on leveraging tax strategies to optimize returns in real estate investments. It covers advanced topics such as tax planning, accelerated depreciation, tax benefits for real estate professionals, 1031 exchanges, retirement account savings, and more. The book aims to equip real estate investors with slightly more advanced knowledge and tools to minimize tax liabilities while maximizing profits. Maybe more importantly, it motivates you to get on top of your real estate taxes, and it really opens your eyes to the reality that you should probably not be paying any taxes if you are a good real estate investor. If you do have a large tax bill, you probably suck at tax strategy. So, as for myself, right after reading this, I emailed our CPAs and requested to set up biannual tax strategy meetings to make sure that we are on track to not pay taxes. So, as well as giving you a good overview of all of the advanced strategies at your real estate investing fingertips, I found this book motivational. I really, after reading this, am motivated to not pay any taxes this year. So I'm going to be proactive to make sure that we are doing everything possible to make that happen. Here are some of the key concepts that this book covers. So it starts out with covering a lot of the big tax reform changes that took place after the 2017 Tax Cuts and Jobs Act. Then it talks about accelerated depreciation and cost segregation. This is an amazing tool available to real estate investors. Basically, on top of your regular annual depreciation, you can accelerate the depreciation on certain items associated with your properties. In graduate school, one of my professors explained this in a way that always stuck with me. He said that if you were to flip a property upside down, everything that would fall is probably subject to accelerated depreciation, meaning, obviously you can't depreciate the land, and anything inherent to the structure of the property is not going to qualify, but all of the fixtures, the HVAC, tons of other stuff is depreciated at a faster rate than your 27 and a half year regular timeline for residential real estate. So that can result in a huge tax savings in a given year. Similarly, they talk about Section 179 expensing. And under this improved tax benefit, you are now able to expense up to $1 million of assets related to your investment properties in the first year. So if you're a commercial investor, this new law allows you to take an immediate tax write-off on money spent on roofs, HVAC equipment, alarm systems, fire protection, and security systems. So that's another huge benefit and win in light of the 2017 tax reform. Then the book delves into what it means to be a real estate professional. And contrary to some popular beliefs, you do not need to be a realtor or have any sort of professional certification to be considered a real estate professional in the eyes of the IRS. You simply have to meet a certain requirements, which is namely you have to hit 750 hours spent working in your real estate profession. So whatever it is, managing your rental properties, education, whatever. You do not have to be a realtor or have some sort of certification. And there are tons of tax benefits available to you if you meet the requirements to be a real estate professional. And the book lays those out very clearly for you. Then it talks about how to maximize short-term rentals. And the IRS, one thing I love learning in this section was the IRS has a little loophole in which taxpayers who rent out their primary residence or a vacation home can receive tax-free treatment as long as the property is rented out for 14 days or less. You can receive that income tax-free, which is amazing. Okay, then the next section of the book was about flips versus BRRRs. And the bottom line is that, at least from a tax perspective, BRRRs are better. Flips are subject to a lot more tax than BRRRs, and you can get most of all the same benefits and arguably more benefits from doing a BRRRR than a flip. If you don't know what a BRRRR is, I'll explain it here shortly. The next section was about 1031 exchanges and reverse 1031 exchanges. This is another great tool in your real estate investor tool belt. This is also known as the like-kind exchange. So very briefly, how this works is when you sell an investment property specifically, you can do a 1031 exchange for another investment property of equal or greater value, and you will not have to pay any capital gains taxes on the profit from that sale. Now, there's a lot of requirements and specifications on how to do this, but it is a very advantageous way to scale your portfolio as a real estate investor and defer paying taxes until much later down the line. And they even talk about how to never pay those taxes. What was it? It was called something like defer until you drop. Basically, you're deferring all your taxes until you pass away, at which point you're going to pass on your properties to your next of kin, and there's some tax advantage ways for them to inherit them and never pay those taxes. So that was cool. Next up, they talked about how to use retirement accounts to invest in real estate, and specifically they highlighted a few different options, but the best one was the solo 401k. So that is definitely worth looking into. It's something I'm going to be looking into. There's a lot of advantages from investing in real estate within a self-directed retirement account. And finally, they talked about opportunity zones, and these are super cool. In the 2017 tax reform bill, a lot of areas throughout the country were designated as opportunity zones, and the government created all these tax incentives for people to invest in those areas. And normally I would say this is a really cool strategy, but something I learned from reading this book is that a lot of these policies are set to expire in 2026. So given that it's 2024 right now, and most of the tax benefits take at least 5 years to kick in, there's like a 5, 7, and 10 year step up within the Opportunity Zone Fund rules, and we just don't have that time left anymore. So I think there's some uncertainty about what's going to happen to these opportunity zones in 2026. So I can't say I would recommend getting into one right now with that uncertainty, but it was still cool to learn about and good to learn that a lot of these policies are expiring in 2026. So this is something that can be put on the back burner for a little while until that's sorted out. There is a ton of great information in this book, but I think 3 of the most important takeaways from this book are cost segregation, flips versus BRRRs, and 1031 exchanges. These strategies apply to a lot of real estate investors, so having a decent understanding of all of these will really serve you well in your real estate investing journey. So I'm just going to do a real quick overview of these 3 things based on what I learned in the book. Okay, let's start with cost segregation. Cost segregation is a valuable tax strategy for real estate investors that's designed to accelerate depreciation expenses into current years rather than waiting to take it slowly over time. So I know I touched on this briefly before, but basically, if you know that you have a large tax bill coming up, cost segregation can be a great way to offset that tax expense. And basically what you would do, you would either purchase an investment property or you would do a cost segregation study on one of your existing investment properties. And in the study, a professional would come out and evaluate which aspects of the property can be accelerated at a faster rate. So it's going to be all of your fixtures, a lot of your systems, carpet, paint, everything that is probably not going to last that 27 and a half years. Usually those things depreciate at a rate between 5 and 15 years. And so in the study, the professional will aggregate all that depreciation and they'll put it all together and you can write it off in 1 year. And this is usually thousands of dollars. And especially if you have a commercial property, like tens, if not hundreds of thousands of dollars. So this is such a valuable tool that will probably come into play for a lot of us or could come into play for a lot of us. So it is definitely worth knowing about and having in your back pocket. So if you find yourself with a large tax bill coming up, this is one option to really offset it. Okay, the next thing that I think is really important to take away from this book is the pros and cons of flips versus BRRRs. And if you don't know what a BRRRR is, it stands for buy, rehab, rent, refinance, repeat. And it's similar strategy to flipping houses, except instead of just rehabbing and selling the house on the market, you rehab it, rent it out, and then you refinance out of the property and then repeat the process. So instead of just selling on the market, basically you're turning it into a rental and refinancing. So it's important to note that there are a lot more tax benefits to the BRRRR strategy than the flip strategy. And I've definitely experienced this as an investor myself. You're taxed 2 or 3 times pretty much on your flips as opposed to your BRRRRs. They put it nicely. They said a fix and flip profit is generally not treated as capital gains income. Instead, it is taxed as ordinary income, which is subject to potentially higher income tax rates. Once a property is turned into a BRRRR property, the eventual sale of the property also turns the profit into capital gains. Another benefit of the BRRRR strategy is that the BRRRR property produces depreciation expenses, which flips do not. Often, the depreciation expense can also be used to reduce taxes from any flip properties that might sell during that year. So there's just a couple good benefits to the BRRRR method, and it does have most of the same benefits as a flip with some added little tax treatment in there. So I think that's a really good thing to consider, especially if you're a flipper. This might be something to test out and see if it works in your business model. Then finally, the 1031 exchange can help defer a significant amount of taxes. Although there are strict rules to the 1031 exchange, it may still be a viable tax strategy, even if you want to take money out of your deal. This was something that I hadn't really thought of before. I have done several 1031 exchanges myself and a reverse 1031 exchange, but I've never subsequently refinanced. So I never thought of a way. So basically, 1031 exchange, when you sell a property, you have to take all of the revenue and profits goes into a third party intermediary holding account, and then you purchase a property that is either the same or higher value, and you don't have to pay any capital gains tax. Now, this is a huge benefit because you don't have to pay that capital gains tax, but the problem is that if you need to get cash out to reinvest into your business or pay yourself, whatever the case may be, this can be a little tricky. I learned from reading this book that you can still do your 1031 exchange and then refinance after the fact and still have a nice little liquidity event. So I think that the 1031 exchange is an amazing tool that can help a lot of investors. It can really help you scale your portfolio. And there is a way to take cash out of your deal subsequently. So this is a strategy that we all really need to know about. Here's what I liked about this book. It contains so much great information about tax strategies in an easy to comprehend format. There's lots of great examples, but not too many. Like I thought in their first book, there were a few too many. I thought this book really struck the perfect balance, and their advice was very actionable. I myself made a little checklist of things to do and review with my CPA after reading this. So I think that this book is pretty much invaluable, especially to anyone in the real estate industry. My only real critique is that it was a little hard to get to the finish line. It wasn't a hard read, but it definitely wasn't a page turner. But seriously, how can you actually make a book about tax a page turner? I doubt that's even possible. So this book is probably as good as it gets. Here are 3 lessons that we can take away from this book and apply to our businesses. Number 1, and the CPAs out there are probably going to hate me for this, but set up a biannual tax strategy meeting with your CPA to make sure that you are planning ahead to properly offset your tax liability. Like I said, I did this right away after reading this book, and to take advantage of a lot of these strategies requires some proactivity and planning. So try to set up 2 meetings a year with your CPA to make sure that you are on track to pay little to no taxes. And you should get there with the knowledge from this book combined with your CPA. You have a really solid shot of having a very low tax bill. Number 2, if you do have a big tax bill coming up, buy an investment property or conduct a cost segregation on an existing investment property in order to take advantage of accelerated depreciation. So we talked about this earlier, but if you are facing a big tax bill, then you need to get ahead of it, do a cost segregation study, and that'll help you offset a lot of your tax liability. Finally, number 3, look into using a solo 401k to invest in real estate. There are a ton of benefits to using a self-directed retirement account to invest, and you can use it to invest in anything, actually, including real estate. So this is definitely worth looking into, especially if you are self-employed. This is a great option. Okay, so who should read this book? All real estate professionals and all tax professionals must read this book. Honestly, if you're in real estate and you don't know taxes, you're just playing in the JV leagues. And if you're a tax professional who doesn't truly understand real estate taxes, like so many out there, then you are probably a suboptimal accountant. Sorry, not sorry. This is our job, guys. You can either level up or stay in the bush leagues. Overall, I rated this book an 8 out of 10. This book is really good. It has tons of great advice. It's easy to understand, and it's probably the best possible way to present tax information. I think that this book should be required reading for all tax professionals and real estate professionals. Now let's take a quick minute to thank our show sponsor, Doratus Academy. Today's book does a great job providing an overview of the tax strategies available to you as a real estate investor. However, I think that my masterclass, The First Steps to Investing in Real Estate, does a better job breaking down how to succeed when it comes to tax planning for your real estate investment business. I go into detail about how to find, screen, and select your CPA, which is a lot harder than you might think. We've been through 3. I also review how to use the most common tax strategies for your business and help you incorporate those into your business plan. Tax planning and finance are just one component of my masterclass about how to get started investing in real estate the right way. So make sure you check it out at doradusacademy.com. We also have a ton of other free resources, including a tax deduction cheat sheet that you can download for free and take with you to your biannual meeting with your CPA. This concludes today's episode. Thank you so much for listening. Come back next week to learn about how we started and ran a property management company for 3 years. And it still exists today. I'm just not part of it anymore. That was a wild ride. Believe me, I'm glad to be off that roller coaster, but I learned so much from it. I am 100% a better real estate professional for everything I learned from working in property management. So you do not want to miss next week's episode. Thank you so much for listening. Make sure that you are subscribed to the podcast and leave us a rating and review. We are a new and growing podcast, so every rating, review, and share helps immensely. Also, make sure that you're following us on YouTube and social media. You'll get a lot more behind the scenes and content there daily. See you in the next one.